I'd love to start by thanking the Committee of E-Business Industry Heads, CB, for inviting me to moderate this webinar on the very crucial topic, leveraging digital ecosystems to grow SME segments. It is important to have more and more discussions on this topic, and I'm glad to be part of this webinar. SMEs play a key role in economic development around the world by creating employment and income-generating opportunities. According to the National Bureau of Statistics, small and medium-scale enterprises in Nigeria have contributed about 48% on average to the national GDP in the last 5 years. They account for about 50% of industrial jobs and nearly 90% of activities in the manufacturing sector in terms of number of enterprises. In addition, a recent McKinsey report states that SMEs represent 1/5 of global banking revenues, generating around $850 billion of annual revenue for banks. This is expected to grow by about 7% annually over the next 7 years. So the importance of SMEs cannot be overstated as a sector and as a customer segment for banks. It is therefore time for banks to further prioritize SMEs and realize that their collective needs need to be considered as technology-enabled services offered by fintechs and big tech firms alike are creating opportunities for even better returns. With the brilliant lineup of guest speakers we have today, I'm confident that we will have a conversational webinar to discuss the scope of the digital ecosystem in the growth of SMEs, and that by the end of this session, we would have gained further clarity and direction on what steps need to be taken to leverage digital ecosystems and further grow the Nigerian SME sector to its fullest potential. Some quick housekeeping. Please pop any questions that you have into the Q&A section, and I will do my best to ensure that they are attended to. I'm also happy to inform you all that the recording of this webinar will be sent to all registered attendees in case you want to revisit some of the issues and solutions that we will cover today. I would now like to invite the chairman of the Committee of E-Business Industry Head, CB, Mr. Adeyemi Atanda, to present his opening remarks. Welcome, Mr.
Good morning.
Atanda.
Good morning, everybody. Thank you so much, Toyosi, for that introduction. I'd like to welcome everyone to this webinar. It's the first that we're doing in this quarter. I mean, actually, we've had one this year before, and this is another one. To start with, CB is the Committee of Electronic Banking Industry Heads. It's constituted by the leaders of digital banking in all Nigerian banks. Our major objective is to drive global best practices in digital banking, stimulate industry-wide innovations, grow the adoption of digital channels, and collaborate with regulators to ensure a safe and robust payment landscape. Is part of our contributions to the growth and adoption of digital financial services. And we are specifically focusing on, I believe that in Nigeria, SME is the lifeblood of our economy. SME is where businesses are able to employ people. SME is what empowers people in our economy. Statistically, it's been said that there are about 40 million micro and small businesses in Nigeria. So if I take a rough estimate of 5 people per household and 200 million population, it goes without saying that in virtually every home in Nigeria, there's a small business. And if it's that vital to Nigeria, then it's something that is worth our attention as practitioners in the digital landscape. We know the importance of this sector, and that's why we have put together this seminar, pulling panelists from across the entire economy, from banking to asset of banking, to digital, to fintechs. We need to find a way, collaboratively, to build a sustainable ecosystem. And it is only when we have done this that we can see the growth that we desire in this sector. Today is not a day for my own speech. I want to just go very quickly into the programs for today, so that we can hear from the experts that are on this call with us today. Without further ado, I would like to introduce our special guests for today. Our special guest is the Managing Director, the Chief Executive Officer of First City Monument Bank Limited, which is a subsidiary of the FCMB Group PLC. He's also the Non-Executive Director of the Nigerian Interbank Systems Settlement System, that's NIBS. He has over 30 years of professional experience spanning various aspects of banking, from corporate finance up to treasury, digital transformation, human capital management, and SME banking, of course. He holds a bachelor's degree in business admin with a specialization in finance from Ahmadu Bello University Zaria. He is also a fellow of the Nigerian Institute of Management, a fellow of the Institute of Credit Admin of Nigeria, and an honorary fellow of the CIBN. He has also attended several executive management and leadership courses in various institutions across the world, including the Harvard Business School. Our guest speaker today is a firm believer in the National Financial Inclusion Strategy of the CBN and a very strong advocate for using technology to drive transformation and innovation beyond the banking industry. Ladies and gentlemen, please join me as I invite our special guest, Mr. Adam Nuru, the MD CEO of First City Monument Bank, to give his opening remarks. We're highly honored to have you in our midst, sir. Thank you.
Thank you very much. It's a pleasure being here today. I think that the biggest asset to one's CV now is maybe the number of followers you have, as opposed to what qualifications you have, which just shows you the changing world that we're in today. So maybe if you just said Alanuru had X million of followers, then I'll get more attention than anything else. but it's definitely interesting times. Thank you very much for inviting me. A number of very known faces on this call, and it's my pleasure to be here. And hopefully I'll stay in for a number of the sessions, and we're happy to contribute if I can. I think that I have a speech which is expected, but I think that beyond even that, I think the theme is excellent at this point in time, because I think that SMEs really are the true trigger for economic growth. And I think leveraging that with technology is truly transformational. In fact, the rate of growth and transition we've seen leveraging technology has propelled companies through a much faster route to success. So thank you very much again, and I'll just read my opening remarks. Good morning, everybody, ladies and gentlemen. I trust that we're all staying safe despite the COVID-19 situation. The pandemic has necessitated countries around the world to adopt measures at minimizing the spread of the virus, with unintended implications on the global economy and businesses. Nigeria, of course, has not been left out of the synchronized response to this pandemic. For example, in Q1 2020, the federal government closed its borders and implemented a total lockdown in states and cities with high infection rates. State governments also followed suit with their own respective containment protocols at sub-national levels. While lockdown restrictions may have been eased nationwide, most businesses in the country, especially SMEs, remain in a vulnerable state. According to a report from the Fate Foundation and Budget IT, 94.3% of about 1,900 SMEs surveyed reported being negatively impacted by the pandemic, particularly in the areas of cash flow, sales, and revenue. While the world continues to grapple with the adjustments to the new normal, opportunities for the integration of digital ecosystems into the architecture of SME businesses continues to grow. This creates potential for them to improve their operations and process even in the face of uncertainty. Over the past decade, we have seen technology redesign the agenda of many businesses, create new markets, and produce new leaders across several sectors. Some of them are in this call as well. And with this, we are witnessing a shift in the balance of power from traditional value chain businesses to models that are based on digital platforms. For instance, 7 of the 10 most valuable entities by market cap in the world run on the back of platform models and operate in digital ecosystems. They are also function within various sectors of the economy, disrupting conventional business models with innovation applied to various parts of the value chain. Surprisingly, this trend has not slowed down, notwithstanding the doubts surrounding the global economy, largely because of the acceleration in the adoption of disruptive technologies and the large number of online business models. In Nigeria, businesses that leverage on technology and digital innovation are also leading a quiet revolution and continue to attract foreign investments. According to a McKinsey report from September 2020, between 2014 and 2019, Nigeria's fintech sector raised more than $600 million in funding, attracting 25% of the $491 million raised by African tech startups in 2019 alone, second only to Kenya, which attracted $149 million. A good example is Jumia, which is one of Nigeria's very well-known e-commerce platforms, which attracted investments of close to $425 million and $250 million, respectively. And they are all still expanding their footprints across Africa with robust platforms. There are also other notable investments into Nigeria fintechs, such as Flutterwave, Paystack, who I'm glad is here, Okra, etc. You also see the emergence of accelerator programs by tech giants such as Google, all agreeing to the growing reputation of Nigeria as a leading digital ecosystem on the continent, with more than 93 million internet users in Nigeria alone. Facebook has about 50 million active customers, and our country is becoming a thriving digital marketplace. Adding to this are several success stories, such as earlier mentioned Jumia, which started out as an e-commerce startup where you can order for household items. Presently, the business has gone beyond this, and customers can now engage in other economic activities, paying for the same within the Jumia ecosystem. There's also the example of Farm Crowdy, an agri-tech startup, which provides a digital platform that connects small-scale farmers with prospective investors. And Paystack, of course, well celebrated, which offers a quick and seamless way to integrate payment services to over 60,000 customers. In a nutshell, with digital ecosystems, it's all about keeping the customers within an ecosystem. Despite these and the prospects that digital ecosystems have to offer, the SME segment, which contributes about 48% of national GDP and accounts for 96% of businesses and almost 84% of employment, is still facing challenges. It is against this setting and considering the magnitude of the role that SMEs play in the Nigerian economy that this topic has become a pivotal one. You will also agree with me that business as usual approach that is common with us within this segment will not deliver the significant leap and value that it desires. In summary, leveraging digital ecosystems to grow SME segments will require a deep synergy between all the stakeholders in the ecosystem to see action and pursue same in a well-integrated manner. Just as we can only get a proper understanding of the intricacies in nature by considering each of the species as part of an ecosystem, so also will we appreciate the strategic importance of SMEs by considering them as groups interacting and evolving in digital ecosystems. On a final note, the contributions of SMEs to the Nigerian economy cannot be overlooked due to the positive impact that they can deliver with collaboration from digital ecosystems. Supporting SMEs in Nigeria to flourish is crucial because they help to create a growing middle class along with new market opportunities. One thing is also clear, whether it's a food retailer looking for an easy-to-use payment system, a farmer looking for an online marketplace to sell his crops, or a laundromat on the street advertising their services online, small and medium-sized businesses are agents of economic growth and activity in the country. So we must all work together to create an enabling tech-savvy environment for them, where they can adapt, use innovative applications and services flawlessly to produce sustainable value for their businesses and the economy. Thank you very much.
Thank you very much for that very insightful speech, sir. I think it has set the tone for how the discussion will go today. Really appreciate that. Thank you very much. We'll go on to the next part of the program on the agenda today. The next set of speakers are very dear to our hearts at CeBIH. CeBIH is an organization that does not joke with its legacy. And that is why this morning we have in our midst two of our advisory council members. The two of them are part of our founding executives, and at various times they've been chairmen of CeBIH. And they're here today to share their goodwill speech and also to lend their voice to the discussion this morning. So that I won't come up again, I'll just introduce the two of them at the same time, and then they can take their speeches, and I'll hand back over to Toyosi so that we can get to the meat of today's event. I think ladies first, if you permit me.
Thank you.
I'd like to introduce to you Mrs. Wumi Ogobi. She is currently the Chief Executive Officer of AQ'd. That's a technology company. And then after her, I will also have our Mr. Ayotunde Kukoni. Mr. Kukoni is currently the Managing Director of Hope PSB. We're highly honored to have the two of you in our midst this morning. Thank you very much. Wumi, please, first. Thank you.
Good morning, everyone. I hope you can hear me clearly.
Very
Yes?
clearly.
Okay.
Thank you.
Good morning, everyone. It's an honor and a pleasure to be on. I am so proud. In 2008, three ladies, everybody hear this in the house, three ladies got together, myself, Runke Kuye Anuche, and decided that we knew that for e-commerce to grow, we had to do something slightly different. We had to collaborate as one. We took a risk. We decided to collaborate rather than compete. We decided to build rather than pull down walls. And ultimately, we decided to trust each other. It was against the grain of how institutions, financial institutions, banks worked that time and maybe even till now. But we had eyes on the bigger picture, the potential of Nigeria, the potential of Africa. Africa has about 1.2 to 1.3 billion individuals, the youngest continent, and probably will end up being the most wealthiest of continents. Within that stands a giant called Nigeria. However, to fulfill our potential, we couldn't look at ourselves as individuals. We had to look at ourselves as a whole. And that was how CeBIH came to fruition. I think we even had another name for it then. It was CeBIH. We couldn't really think of a name. One thing we all had in common was that what name should we pick? But I'm sitting here with my friends and colleagues, and I'm asking of you to go against the grain in this discussion today, to not follow the norm, to take a risk. There's an issue between profitability and organizational culture and what the SMEs want. The topic about SMEs is not new all over the world. The reality behind it is the listening to the SMEs and the delivery of products and services with technology, there's a disconnect. During our time, we had to say a few things that were not necessarily true in order for CeBIH to come to fruition. Again, I harp on the point that it wasn't actually our leaders that had the vision. It was us here within CeBIH that had the vision. To communicate the vision, deliver the vision, and grow the vision was really what the task was. Now it's in your hands. So many years later, we've handed it over to you. Don't conform. Don't listen to the noise that will distract you from your purpose. Let this discussion become a reality. If you look at the potential of the SMEs that are out there and what you have today, this organization, this committee should take Nigeria to the forefront where it should actually stand. And I would like to come back in a few more years and say I was there at the beginning. So to everybody here, to our panelists, to our guests, to everyone watching far and wide, please let's make this an honest and fruitful discussion that will take us to the next level. I thank you all for the opportunity to be here. I wish you the very best. You know what? Go conquer. Go be different. Set your mark. I'm so proud of all of you. Goodbye.
Thank you so much, Wumi. Over to you, Tunde. Thank you.
Okay, so thanks, Yemi. First and foremost, I would like to say a big thank you to Mr. Adam Nuhu for his wonderful speech, and also to Wumi, the founding, well, I don't know if father is the appropriate word to use right now, you know, but the pioneer, one of the pioneer members of CeBIH. CeBIH has done excellently well, but trust me, there's still a whole lot more to do. And the topic for today could not have come at a better time. I don't have a speech prepared like Mr. Nuhu, but I would just like to say a few things. First and foremost, the SME sector is the backbone of major developed economies, right? And it's a very important contributor to not only employment, but also to economic growth. In South Africa, SME accounts for about 91% of businesses, 60% of employment, and it contributes about 52% to the total GDP of South Africa. In Nigeria today, we have about 70 million SMEs. We have close to 40 million MSMEs, right? You then can begin to imagine the impact that that would have on the economy if that sector is harnessed properly. One of the sustainable development goals of the government, federal government in Nigeria today, one is to enhance financial inclusion. I dare say to you, a number of those SMEs trade by collecting cash. A number of those SMEs don't have bank accounts. What I would like to see from this discussion, not only digitizing, right? And the COVID era has also then come to show us that we actually can continue trading even when there's a bit of lockdown or restriction in movement. Shops don't have to open before goods are sold, right? So what I would like to see, and I would implore the participants, the people who will be taking different roles in this discussion, to go all out, look for how we can not only digitize that space, and of course, with digitizing that space will also come things like payments and so on and so forth, which is the major thrust actually. Because at the end of the day, if inclusion is enhanced, if that sector is appropriately digitized, not only would it lead to the employment of more people, thus reducing the poverty level in the land, it then also gives the owners of the business more visibility and access to funding, which ultimately would impact on their own profitability in a positive way. It will also ensure that appropriate level of taxes are paid. And when taxes are paid, hopefully, yeah, government will also then have enough money to provide the appropriate level of infrastructure, thus improving the standard of living for everyone as a whole. So the whole subject around digitizing SMEs, and I would like to extend to even MSME, it's a wonderful one. And I would like to thank CeBIH for coming up with this. We can't have too much of discussions around topics like this. So I will encourage us all to be very attentive. And in the same vein that we'd always work at CeBIH, look for more ways of collaborating to improving, this subsector of the economy. So that's what I would like to say, not a speech, but just some form of pep talk to also ginger the discussion. Thank you, Yemi, and thanks to the entire members of CeBIH.
Thank you so much for that speech, Sunday. Really appreciate it. Thank you. So I think it's time for us to go into the rest of the program now. And I hand over back to Toyosi. Toyosi, over to you, please.
Thank you very much, Mr. Tonda. I'd like to first thank our special guest, Mr. Adam Nuru, for setting the tone for today's discussion. You highlighted the importance of SMEs in the overall growth of our economy and also the need for attention to be given to a digital ecosystem in order to help with digitization of SMEs in Nigeria. So we thank you for your comments, also to Ayotunde and to Wumi, who are Wumi is a founding member of CeBIH and Ayotunde is a past president. So we just want to thank you for your goodwill messages. Now to go into the rest of the program today, I'd like to start with our next guest speaker, who is Mrs. Toki Mabogunje. She's the president of the Lagos Chamber of Commerce and Industry. Toki Mabogunje is a business consultant interested in the growth of small and medium enterprises on the African continent. Over the last 33 years, Toki has been involved in commercial and business enterprise from both a public and private sector perspective. We welcome you this morning and we look forward to your speech. Thank you, Mrs. Toki. Please come on board.
Thank you very much, Toyosi, and good morning to everyone. Mr. Adeyemi Atonda, Chairman, Committee of E-Business Heads, CeBIH. Mr. Adam Nuru, Special Guest and Managing Director of FCMB, PLC. Other distinguished speakers, distinguished ladies and gentlemen. It's with delight that I speak at the virtual gathering, and I appreciate the leadership of CeBIH for your kind invitation. My topic is understanding SME's business segment. We have heard so much already from Mr. Atonda himself, Mr. Adam Nuru, Ayotunde Kuponi, and Mrs. Wumi Ogumbi. So I guess my speech right now would be to bring all of this together. So I wish to begin by highlighting the importance of SMEs in the Nigerian context and give some insights to the dynamics of Nigerian SMEs. So we know that SMEs play a significant role as the engine of economic transformation and industrialization in economies around the world. While SMEs are instrumental in improving income redistribution, creating employment opportunities, enhancing industrial diversification, and alleviating poverty incidence, the majority of SME operators in Nigeria are very vulnerable to economic shocks. And this explains the high mortality rate of SMEs in Nigeria. Access to finance, especially bank loans and advances, remains a constant constraint to SME operators. According to a report on SMEs by PwC Nigeria, access to finance, which is an enabler of business growth, is the most pressing challenge faced by small businesses across Nigeria. The report put the financing gap for Nigerian MSMEs at about 617 billion naira annually. Technology adoption or digitization is also still quite low in the SME space, particularly among SMEs in the informal segment of the broader economy. In addition, poor infrastructure, particularly inadequate grid supply and poor road networks, constitute a huge burden to SME operators in the country. According to the Manufacturers Association of Nigeria, about 35 to 40% of total costs incurred by SME manufacturers is expended on alternative sources of power alone. The cost of doing business in Nigeria is incredibly high due to this huge infrastructure deficit, which is in excess of $1 trillion US. The high cost of doing business has made it increasingly difficult for SMEs to survive and thrive in the Nigerian operating environment. When we talk about the SME business segment in Nigeria, we're informed by the Small and Medium Enterprise Development Agency of Nigeria, SMEDAN, in a research report produced in collaboration with the Nigerian Bureau of Statistics, that the total number of MSMEs was 41.5 million as of December 2017, out of which 41.4 million are micro enterprises. According to official data from the World Bank, the gross domestic product in Nigeria was estimated at about 448.1 billion US dollars in 2019. That is last year. SMEs in Nigeria contributed 48% to the country's gross domestic product and accounted for 96% of businesses and provided 84% of employment, that being about 57 million jobs in the country. SMEs in Nigeria also accounted for 7.27% of goods and services that were exported out of the country last year alone. It was found out that out of this number, Lagos State has the highest number of small businesses, numbering about 3,224,324. This position was closely followed by Oyo and Kano states, with 1,864,054 and 1,794,358 respectively. From these statistics, the opportunities to unlock the growth potential of the SME sector is enormous. If access to finance as an enabler of business growth can be dramatically improved, certainly SME business performance will improve and their contribution to GDP will extend beyond the current 48%. The majority of small businesses, about 80% of them, operate in the education sector, manufacturing sector, wholesale and retail trade, human health and social work sector. Manufacturing, wholesale and retail trade take up about 56% of Nigerian medium enterprises. SMEs also have a strong presence in other sectors such as hospitality and food services, professional, scientific and technical services, real estate, construction, transportation and storage, information and communication. Banking remains an attractive sector in Nigeria. However, despite the existing competition, a large percentage of SMEs remain underserved. According to the McKinsey September 2020 report on fintech, poor access to banking services, issues of affordability, and poor user experience all contribute to the frustration that SMEs experience. While I agree that some financial institutions are making great efforts to deepen their footprints in the retail segment or SME segment of their customer base, I believe that there's scope to do a lot more. According to the said McKinsey report, this has created an opening that fintech has been quick to take advantage of, with many of them stepping up to develop enhanced propositions across the value chain to address the pain points in affordable payments, quick loans, and flexible savings and investments, among others. There's a need to expand the range of financial instruments that are available to SMEs and entrepreneurs in order to address diverse financing requirements for varying circumstances, which will increase the SME's resilience to changing conditions in the financial market and also improve their contributions to economic growth. While there are many barriers to SME growth in emerging and developing markets like Nigeria, insufficient access to financing is particularly constraining and represents the most robust barrier in business expansion within the domestic business landscape. This is partly because as many as 65% of SMEs in Nigeria are active in the informal sector, which employs about 75% of the labor force. Nigeria offers significant opportunities for tech-driven financial services to SMEs and increasingly the mass market segment. The McKinsey report reiterates that SME owners have had to contend with limited access to financing and value-added services. Loans offered by banks typically come with steep interest rates, a lengthy application process, and collateral and guarantor requirements that SMEs and micro enterprises find difficult to fulfill. In addition, cross-border payments with foreign suppliers and daily transaction limits that inhibit their bulk buying are also points of frustration for SMEs. Entrepreneurs in this segment mostly desire low-cost accounts for their financial transactions, such as access to loans at affordable rates and affordable pay-as-you-go health insurance premiums. However, lending rates are typically high. Additionally, onerous documentation requirements and hidden charges are cited by many individuals as their concerns. Distinguished ladies and gentlemen, permit me to say that one major lesson small and medium business operators must learn from the global pandemic is the need to embrace digitization in every aspect of their operations to enhance the scale, size, and scope of their businesses. This is the new normal. Without digitization, it will be difficult to upscale value addition across product and service value chains. And this is where fintech companies and financial institutions need to intervene by developing more affordable and efficient digital products that can help stimulate business operations for improved performance. In recent months, we have seen some SME business operators adjust their operating models in the light of the pandemic. And this makes a more compelling case for banks and fintech companies to create digital products that will facilitate the viability, the resilience, and the sustainability of these business models in order for SMEs to thrive in an increasingly complex business environment. Overall, it is crucial for SME businesses to adopt technology, as there are lots of affordable applications that their businesses can utilize to manage their finance, operations, deliveries, inventories, etc. Let me also emphasize the need for government at all levels and monetary authorities to formulate policies that will significantly de-risk the SME space. This could be through the provision of credit guarantees to SME business operators, developing private-public partnerships to address the huge infrastructure deficit, promoting ease of doing business policies to moderate production costs, while also ensuring clarity in the business environment. De-risking the SMEs will make these businesses much more attractive to the various sources of private financing. SME business operators will also find it easier to access funds at cheaper rates while minimizing the risk of business failure. In conclusion, let me once again commend the leadership of CeBIH for organizing this webinar, and I truly appreciate the kind attention of all participants. Thank you very much.
Thank you very much, Mrs. Mabagunje, for your speech. Just to give a few highlights of what you told us. Thank you, because you acknowledged the enormous growth potential of the SME sector, which in turn will improve the contribution of this sector to the nation's GDP. You also mentioned about access to finance being the biggest challenge faced by SMEs in Nigeria today. You laid a lot of emphasis on this. And you talked about how SMEs have learned to embrace digitization based on the global pandemic that we've all been involved with this year. And you mentioned an opportunity for fintechs and financial services companies to play a part in terms of providing digital products and services. And finally, you emphasized the great and urgent need for government at all levels and monetary authorities to formulate policies that will significantly de-risk the SME space in order to make the businesses attractive to various sources of private financing, and also in order to minimize business failure. Thank you very much for these nuggets, Mrs. Mabagunje. Our next speaker is Adenike Adeyemi. She's the Executive Director of Fate Foundation. Adenike Adeyemi is a development sector professional with 19 years of experience in nonprofit management, enterprise development, education, and youth enablement strategies. In her role as CEO for Faith Foundation, she leads the fulfillment of the organization's mission to enable aspiring and emerging Nigerian entrepreneurs start, grow, and scale their businesses. Welcome, Adenike.
Thank you very much, Toyosi. Thank you very much. I would also like to acknowledge Mr. Adeyemi Atoda, the chairman of CeBIH, and also Mr. Adam Nu, our special guest of honor. I also would like to acknowledge Mrs. Tokima Bogunje, who is a friend of Faith Foundation and definitely a friend and advocate of Nigerian micro, small, and medium enterprises. Thank you very much for the invitation. Over the next 15 minutes, I would like to speak on my topic, which is the case for digital interventions for Nigerian MSME businesses. I have taken the liberty to switch to micro, small, and medium enterprises rather than just saying SMEs. As you'll see from Mrs. Mabunje's presentation, out of the 41+ million micro, small, and medium enterprises we have in Nigeria, 99.8% of them are micro businesses. So when we say SME businesses, those are less than 7,000. And if we're talking about the large context and the population, and we're using the definition that SMIDAN uses, it really is appropriate to know that we're really talking largely about micro businesses and not just that. So in my presentation, I refer to MSMEs and not just SMEs. Thank you. Just in terms of the flow of what I'll speak about, I'll speak largely around digital literacy, because I think a lot of the conversations and even the background context that we've had and what Ms. Mabu just spoke about was also really around developing the strong digital literacy framework to be able to effectively provide that digital technology support for our businesses. I'll look at why it is important. As we're looking to support and intervene to support this segment, what are the key demographic considerations we need to look at? I'll also speak around some of the intervention components that are very critical. I'll share a very high-level case study of our experience of a program we've been running in the last 3 years, and then talk about critical success factors with that. So with respect to digital literacy, the way I define digital literacy for Nigeria's micro, small, and medium enterprises is when entrepreneurs have the awareness, attitude, and ability to appropriately assess, evaluate, manage, and utilize digital knowledge, digital tools, and resources to grow and manage their businesses. Oftentimes, and this is also even from our own experience, like I said, over the last 3 years, because there were a lot of assumptions that we came into when we started providing support to the entrepreneurs that we've worked with in this space. Next slide, please. More often than not, when people talk about digital interventions or digital support, the focus really is around digital marketing. And digital marketing is just one component out of so many components in this conversation. And as we're looking around digital enablement and intervention strategies, if people don't know about what is available to them, if people don't even feel they can use them, we're not going to be able to solve the problem. And people have to, all our entrepreneurs have to be able to have the opportunity to it's just like when we go to the market, you want options. You want options, but you can't make decisions of the options if you don't know what it can or cannot do for you. And if you also don't have even continued support around it. So in a holistic perspective, awareness is important. The knowledge about the impact is important, but also the ability to be able to support and use any of these tools, the knowledge, the resources are also very, very critically important. At the end of the day, we want to be able to say that whatever digital intervention strategies we provide, the entrepreneur can see and use it in such a way that it helps them start, grow, manage, scale, and build their businesses. So why is it very important? And I think we've talked about this. The previous speakers have also spoken about different aspects of this. Overall, for me, is really around how it really helps to spark job creation, creativity, value addition, and growth. one of the things that has stood out for us when in programs where we've made very significant interventions for digital literacy is appreciation of numbers in a totally different way. A lot of digital platforms, one of the things that they help entrepreneurs do very well is have an appreciation of numbers, the numbers that drive growth, numbers that drive customer revenues, sales, and all of that. And because there's a strong design component in digital platforms, whether from operations management, digital marketing, people management, or e-commerce and the likes, you're able to see numbers that drive your business and what that means and the ripple effects that it has. And what that does is that it almost gives a feeling of empowerment to even the entrepreneurs, that not only do I know the different things that drive the growth of my business or cause and effect of different things that I do, I'm also empowered to be able to make decisions for my business. It helps to improve knowledge. It helps to improve access it helps to improve reach. So even if we look at things around digital marketing, which is primarily one of the main areas and the lowest hanging fruits, is that in a time over the last 8 months where a lot of businesses had to shut down, most businesses could not physically operate or sell from their sales location. That opportunity where there's landless or borderless access to markets was really very critical. And so you're not limited by where you are, you're limited really by your ability to be able to use these tools and all of that. If used very well, digital tools can also help to enhance financial literacy. If you look at the number one knowledge gap that a lot of entrepreneurs have is really around the knowledge of the numbers that drive their business. So making assumptions around the revenues, the expenses, and all of that. And one of the things that we've seen from tools around that help to better manage businesses and entrepreneurs' financial needs is being able to make the way that they take the number and explain the number in so many easy and simple ways. Quite a lot of us know a lot of SMEs now that when we reach out to them, even using simple tools like WhatsApp, they're able to send an invoice immediately, they're able to acknowledge immediately. And all of that is also centralized into a larger financial management system that they can see who bought their products or services over the last few months, what did they spend their money on over the last few months. So just even that view from a financial management perspective is also important. The other part which Mrs. Mabuji also touched on in her presentation was around operations management. Whether it's managing procurement, customers. I know there are a few banks now that have integrated even, not of banks and even some of the fintech companies where there's an integration with sourcing, how some of SMEs source products and integrating that with their financial systems or even directly with their bank itself. So they're able to see what orders that they made, orders that they've sold. There's a particular case study that someone was sharing with me earlier on this week around one financial institution in East Africa and a partnership with an FMCG company. So what they did was they worked with women who were suppliers within the particular value chain for that FMCG company, and also had a partnership with a bank. These were micro-enterprise women who probably had maybe maximum of about 6 years of education in terms of literacy levels, but working using simple phone devices, they were able to do a partnership in such a way where the women were able to request for inventory from this FMCG that they would eventually sell, use SMS, USSD codes to do that request, and also monitor and track their inventory with that. So rather than going physically to the FMCG company to be able to make this request and services, they can do that and it will be delivered right to their market stalls. As people are making payments, they were also making payments using e-payments channels that were also USSD based. And in some cases, when they needed to get loans to be able to finance the sourcing of this product from the FMCG, they got it directly through the banks. So if you think of operations management, if you think of even access to finance, if you think of financial literacy, just using very simple, very basic devices for market segments that one would not even have, or for entrepreneurship segments that one would not even have thought will be able to have that oversight. What is really such a powerful case study. And when we're thinking of this, we really have to go down, consider all the demographic segments in our conversation as ways in which this can be efficient. And then speaking of demographic segments, when we're thinking of digital interventions for micro, small, and medium enterprises, it's very important that we don't lump everybody in one bucket. And as we design programs, as we design products and digital services, we need to take into consideration, first of all, age. Younger segments of the population have a faster adoption rate. Next slide, please. Have a faster adoption rate to use of digital tools and digital products and services. So the way you define a digital product for entrepreneurs who are up to about 35 years may be different from entrepreneurs who are 35 and above. Same again with literacy levels. The way you define products and services for those who are of certain literacy level segments. So for instance, maybe minimum of secondary school education is going to be very different to that. To higher literate population segments. One of the other things that we also need to consider is access to connectivity. We had to run our programs for all our entrepreneurs over the last 8 months digitally, as I'm sure most of the organizations here have for their segments. But then in one of the things that was a major factor in the design of our programs, the timing of our programs, and how we ran them was around access to connectivity, particularly when, even in Lagos, if you're looking at entrepreneurs who are within the commercial parts of Lagos and those who are on the outskirts, it's a bit different. So you want to look at access to connectivity levels, particularly if those digital tools and resources require some form of internet connection. You want to also look at the devices that our segments have. Are these devices, whether from a device type, so are these people that use laptops or they use tablets or even mostly phones, which we'll find more of the kind of our segments use. But then even if you're looking at the phone, what type of phone types do they have? Because more often than not, sometimes we design digital intervention products, but if we don't really think of the devices and the tools that the entrepreneurs are using, a lot of times the reach and the impact and the use will be very inefficient because really they don't have the devices or tools to be able to do that, or the connectivities within their location is very limited, and those also limit access issues. In terms of designing intervention strategies, one of the most efficient ways, again, is also to look at sectors and industries, like the example that I used earlier on. You want to look at value chain, what is very specific to that. So the way you will think of digital interventions for those who are running schools. So there are quite a lot of players within the MSME space who have schools, small creches, preschools, primary schools, and all of that. The way you define products, whether for them to teach, whether for them to access financial products, whether for them to even manage their population, is very different from those who are doing retail segments in a particular sector. And the more we focus on that sector or industry approach in terms of thinking through the strategies and the options that we have, the easier it is for use, for willingness, for attitude, and even peer and shared learning. Because one of the outcomes from the initial case study I mentioned was that whenever any of the women had issues, they were able to also work with some of the other women within their market segment to share the knowledge, to share some of the feedback and the troubleshooting strategies that they had. So those are important things that I just wanted to share from a demographic consideration perspective. The next thing I thought it was also important to highlight is the components around it. So when we're thinking of digital interventions, we have to think of that overall gamut of digital literacy. Like I won't focus on digital marketing because I think that that's probably the one that a lot of us think about. We need to always start from the outside on the overall thing. What exactly do we want this person? What decision do we want them to be able to make digitally? So what's the overall digital strategy or approach for the demographic segment that we've defined? Which part of their business model is this important? Is it access to finance? Is it operations management? Is it linkages with market? Is it sales and all of that? Why is it important and how do we intervene with that? And then apart from digital marketing again, I think one of the important things that we need to also think about, and it's good that we have quite a lot of financial institutions on this platform, is digital safety and security. So privacy issues, safety issues, security issues. As a lot of SMEs are getting exposed and even finding it easier to use digital tools and resources, what's also happening now is that they get more exposed also to security issues and people that can take access of their platforms, their websites, or even simple things like WhatsApp. We've seen an increase in WhatsApps being hacked and people's profiles being used to be able to get money. So when we think about this, we have to think about how do we also protect our entrepreneurs from safety, privacy, and security issues. There are other things around e-commerce, and one of the great things that we've also seen in the last few months is quite a lot of e-commerce platforms that have also come up to also help to support and to enable a lot of MSMEs across different segments to better reach their markets and all of that. One of the things we need to also think about is how to also empower MSMEs also even in that e-commerce strategy and constraints. For some of the much more outwardly mobile ones that have easy access and more familiarity with things like Facebook and Instagram and Google My Business, one of the things that we also need to teach them is digital communications and etiquette. So how do you relate with people now in the digital world? How do you build teams that build people, build staff, build resources that relate with people in the digital world to make it effective and efficient? Because now relating with people one-on-one is not the only thing, and that's something that people have gotten used to. But if you have a shop front and you have to, even whether or not you have a physical shop front, but you have a digital shop front and you're relating with customers, how do you do that in a very efficient way? And then last but not the least is that there are quite a lot of tools and resources that are available. Some of these tools and resources even have even discounted or even free opportunities for a lot of micro businesses and small businesses to take advantage of. And I'm not talking just of international types of digital tools and products, but even local ones, quite a lot of local innovations that we've seen across board. And so it's important to provide that awareness, again, across digital marketing, operations, financial management, procurement, inventory, all of the above, and showcase that to our SME segments. I wanted to share a highlight of even our own case study at Faith Foundation in a program that we've run since 2018. One of our flagship programs is the Aspiring Entrepreneurs Program, which we've run since 2000. And about 3 years ago, we decided to add a very strong digital strategy component into it and called it the Digital AP Digital. From our learnings in terms of what worked, in fact, we used 2018 as our guinea pig pilot year, and then 2019 really rejigged the entire model. And I will share two things that we found that are very, very important. Number one, you can't make the digital intervention or digital literacy as a separate subject. You have to incorporate it across board. So even if you're thinking, teaching businesses around how do they understand their market, how do they understand their customers, how do they even develop their products, you have to bring in the digital aspect in helping them to think through that. One of the simplest things was even helping them to define who their customer segments are and what are their digital behaviors. So if you're a baker and you have people that order your cakes, what are the kind of behaviors or the kind of persons that will purchase your baked goods and products and services? From a financial literacy aspect, we also had to involve a way where you teach them using tools, using applications, and using digital platforms that allow them to also start to do their bookkeeping in a digital way, but also in a very simplistic way, and also understand it. So you have to incorporate it across all parts of the curriculum, and it can't be just one separate standalone subject that is in the larger program too. The other thing that I would also like to share is that there has to be like milestones, almost like a carrot approach, where you want to sort of help them to say, okay, if you're able to do this and this with your application, you will be rewarded with this. So rewards can be free ad credits, free tools, free samples of free product, but just putting a motivation to them. But just in addition to that motivation, let them also see how the milestone that they've taken on board is also helping them to increase their market reach, increase their customer reach, increase their revenue reach at the end of the day. And then last but not the least that I would like to share is that group learning, collaborative learning is also very important. So when we have SMEs and we're providing digital intervention strategies for them, let's also find ways in which there's that community building, community learning, community approach to them, because more often than not, they would rely on the other entrepreneurs to also provide guidance in what they've learned, what works and what is not working. And so just in rounding up again, we cannot but take advantages of the use and the opportunities that digital interventions provides for us in helping to grow and build our SME segments. In terms of emphasis, again, let's be very clear when we define and design this product in terms of the demographics, what their needs are and how those products and services address those needs. Let's make sure that it's linked with their entire business need growth, their business need levels. And there always has to be that hands-on support as we're providing that hands-on guidance with them to be able to allow them to troubleshoot, to give feedback, to get guidance when they're having challenges along their learnings and along that stage and process. Thank you very much.
Thank you very much, Adenike, for your wonderful presentation. Thanks for the case that you've made for digital intervention in SMEs. You gave us a clear definition of digital literacy and its importance in respect to sparking innovation and creativity, improving visibility and market reach, and enhancing operations management, thereby reducing the cost of doing business. You also highlighted the major factors to consider in the quest to improve digitization of SMEs, which include the demographic factors like age, literacy levels, location, and sector, which play very key roles. Thank you so much for your contribution to this conversation. So there are a few questions which will be asked of the speakers who've spoken so far in the Q&A section. So just we'll move all of that to the later parts. We're moving on swiftly to the next part of the program. We have two keynote speakers this morning and now afternoon. And our first keynote speaker is Shola Akinlade, the CEO and co-founder of Paystack, a technology company powering payments and growth for businesses in Africa. Paystack processes over 50% of all online payments in Nigeria and accelerates growth for Africa's best companies. Last month, Paystack was acquired by Stripe for $200 million in a landmark deal for the African payment space. We say a huge congratulations to Shola and the entire Paystack team. Welcome, Shola.
Thank you so much. Thanks for everything. Thanks, Toyosi, for having me. Yeah, cool. So welcome, everyone. Good afternoon again. My name is Shola Akinlade, co-founder and CEO of Paystack. I'm glad to be here. I want to thank everybody at CeBIH because I think like I felt bad when my face was on the internet like last week because I was like, yo, actually, Paystack was built by the entire industry, you know, like so many people looking out for us, I heard Mrs. Ogumbi speak, I can remember like 2016, when we came to Zenith that we were begging and, all that, same with Yemi. So I think that just seeing all the bankers in the room is really, I just want to say thank you so much. Thank you so much, because for a lot of you, you didn't have to do what you were doing. Like you had your work, you had your wahala, you had all the problems. So to still just like look out for someone that is trying to just like do so that disturb you, I think I really, really appreciate. So thank you so much. I won't talk too much. So I will just talk about maybe the work we're doing at Paystack and how we're using that to support SMEs and scale digital financial services. So it's going to be a very short talk. A little about me. So I'm a software engineer. So I was writing software from school. And at some point, I just figured that, you know what, this payments thing that people are talking about, let me try my luck, and I thankfully got into a program in San Francisco. So they gave me $120,000 to just like start the company, literally like that. So Y Combinator. And so we started Paystack, and 5 years later, I think it has grown significantly. We're supporting a lot of businesses. We have about 120 people on the team. We're doing a lot. And a lot of our work is to figure out how to accelerate commerce in the continent, because I think Africa is the most underpenetrated like payments market, like digital payments market in the world, and that is slightly annoying, to be honest, because why? Like we have a very strong banking infrastructure and all that. So like, why can't we just get more people included in the system? And so a lot of our work is figuring out how to make that work. I think we've made a lot of progress. So when we launched Paystack in 2016, I remember looking at the CBN website and seeing what Nigeria was doing monthly in payments, and today Paystack is doing like more than 5 times what Nigeria was doing before we launched. So that's been some tremendous progress. And we're just getting started. We haven't even like figured anything out yet. We're still getting started. The way we think about this, we're really passionate about helping businesses grow, especially the small businesses, because I think that's where we can. And I'll talk more about that. I think businesses in the continent are undertooled and underserved. So as a software engineer myself, like I feel bad sometimes, like, what, all the software engineers in the world, like how many of them are like really focused on building for businesses in our continent? And, people talk a lot about, Instagram, there's commerce happening on Instagram, blah, 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 blah. I'm like, yo, chill. You know what? Somebody's sitting down in California. They've uploaded their inventory online. They're chilling. People are buying. Everything is happening. But you have an Instagram store and you have to respond to every DM. If someone wants to choose between a blue shirt and a white shirt, they have to ask you. They can't just pick it. Like that can't work. That can't scale. So our work is, how can we build the tools and services to help people start and scale their businesses? And we think about it in 3 ways. The first part of it is, how can we help people get started? Because I think getting started is usually a big problem. Like if you wanted to start getting into digital payments today, where do you start from? And so a lot of our work is working with the banks, KYC, like just doing all the heavy lifting, so that if someone wanted to accept payments today, they will do it. Just get on, put your details, do what you need to do, and get started. Have access to all the tools, all the plugins, and everything you need to do. So the first part of it is just like thinking and building tools to help businesses get started, because we think the easier it is for businesses to get started, the more businesses will get started. Most businesses have their own work already. Like your business is not payments. Your business is not financial services. You just want to run your business. You don't want to have to think about your business and then payments or something else. So we understand that, and our work is figuring out how to make that work. The second part of it is helping businesses get paid, because at first I was very naive. I thought, oh, getting started is the problem, but very quickly realized that, even once you get started, there's a bigger hurdle of getting paid. You have customers paying across all the different fragmented channels with different methods, with different things. So as a business, as a small business, you want to think about, like, if anybody is trying to pay me from anywhere in the world, how can they pay me without like telling them how to pay, So again, just working with the banks and figuring out how to make sure that anybody can pay any merchant at any time, and I think we've made a lot of progress there. And then the final part, which is the part I really get excited about, is helping businesses grow, because digital payments, there's a lot to leverage there. Like if you're accepting cash day to day, cash is free, but cash comes with its own wahala too. Like how do you like know who your customers are? How do you do a lot? I was telling a story last week. When COVID happened in March, a lot of businesses shut down, even barbers. And what I realized was that I had been to like a barber in San Francisco. I had been to a barber in New York, and I have my own barber in Nigeria that I use. And you won't believe the barber I went to, I've just used him once. They just texted me. They were like, oh, COVID is happening. Please buy a gift card and you can come back to use it later. The person in San Francisco, again, texted me and sent me an email and said, oh, COVID is happening, was shut down. You were selling gear now. So if you wanted to buy like branded shirts from our barber shop, please come buy it. The barber in Nigeria, I didn't hear from him. I don't even know if he knows me or anything, because he doesn't have a way to reach his customers at scale. It doesn't. And and I suspect that the only difference between him and them is because those ones, I paid them with card, like I put my details when I was paid, and it was just easy. It wasn't as if I gave them my details like that, So these things sound small, but there's a lot we can do to help businesses. They don't have to think about it themselves. The only decision they need to make is to choose a partner, is to choose to be pro-digital. And once they make that choice, we have to figure out, how do we help them leverage all this? Like what the customers, the reconciliation, like even, and I was hearing it like one of the speakers that talked about it. Like if you have people working for you, you also even need to empower them. So we talk about SMEs, MSMEs, but some of them have people that work for them. And I have 3 people working for me in my business, but I'm the only one that has the token or access to the internet banking, and they're still disturbing me. And, it's just complicated. So there's a lot of tools that can be built. There's a way you can give them access. There's a way everybody can be empowered, and you can restrict that access. They don't have to see the balance. It's just the transaction alert, and all that. So I guess from where we sit and from where I sit, I think there's a lot that can happen. And there's a lot that will happen in the industry. I think the billion people in the continent, I think digital payments has to work. Like it has to work. Like cash takes so long to travel. Like imagine if I have to send cash from Ikeja to Victoria Island. That's so long. That's at least 45 minutes without, at least on a terminal is closed. That's like 1 hour, But digital payments is instant, It has to work. People have to be able to accept payments from anyone, anywhere else. As long as a business is restricted to selling to people in front of them, you are limited. You are actually limited by the sunlight. You are limited by so many problems you don't have control over. So it is in the best interest of businesses to think about digital financial services. And as an ecosystem, as bankers, as fintechs, we have the responsibility, and I think we are taking the responsibility to make this easy for businesses. So thank you so much, everyone. I'm happy to be here. Yeah, bye.
Thank you very much, Shola, giving us the Silicon Valley vibes already. So thank you very much for sharing your experience at Paystack and also sharing how Paystack has enhanced financial inclusion with SMEs. You also highlighted the key steps to digitization, which is getting people and businesses started on the digital highway, and also helping businesses get paid by working with banks, ensuring that the merchants also get paid, and also helping businesses to grow. You've also laid emphasis on the critical nature and efficiency of digital payments, especially in an industry as ours. So thank you very much. There'll be more to come in the Q&A. Thank you very much. We move to our next keynote speaker. I'm excited to introduce Chilekwa Banda. She's the head of strategic partnerships at Digital PayGo in Zambia. Chilekwa is a seasoned digital financial services professional from Lusaka, Gambia, with 12 years experience in the technology industry. In her current role as head of strategic partnerships at Digital PayGo, Chilekwa understands the importance of aligning the business development and corporate strategy across functional areas company-wide. So she's here to give us today the Zambian perspective. Welcome, Chilekwa.
Hi, Toyosi. Thank you so much for having me. It's a pleasure to be here. I must say I'm very excited to be in the same room, virtual room, with commercial powerhouses, that being Nigeria. So it's a pleasure being here. Okay, I have a presentation that I will be taking you all through. But before I even go into my presentation, I think there's something that is very, that has really come out in today's discussion, from the introduction by Lady Wunmi and to the recent discussions by Shola. For me, what is really coming out strongly is that the numbers are there. We know these facts. We know what is going on in the world with the SMEs, be it COVID, be it the banking, the financial sector, the non-banking financial industry. But what's the missing link? Where are we going wrong? So I'm hoping my presentation will give you some insight into what is happening in Zambia and how we can marry the two, that being the Western world and the Southern African, the world over. Okay, so I'll give you a brief introduction into the Zambian market. But firstly, I'm Chilekwa Banda, and I'm here to provide the Zambian perspective of the roles that fintechs play in bridging the gap between SMEs and the financial service providers. So Zambia as a whole consists of 18.5 million people. And of these 18.5, if you can look at the statistics at the bottom there, you can see that the rural population and urban population are almost at par. It has been increasing, but slightly with the rural population around 57%, whereas the urban population is around 43%. And 9 out of 10 SMEs are said to operate in the informal sector. We're looking at agriculture, where we have the agriculture inputs and the retail owners, the restaurants, the hair salons. Funny enough, Shola mentioned the story of the barber. And then we're looking at mining, which is one of the most and biggest industries in Zambia, because Zambia is a mining industry. And then we're looking at manufacturing, textiles, and then we have the ordinary tailors and the trading services, which is your food processing and MNCG. When you think of Zambia's growth potential, if you look at the wholesale and retail, mining and quarrying, construction, transportation, financial insurance activities, all the way to real estate activities, these, you can agree with me, are mainly urban centered. Now let's focus on agriculture, forestry, and fishing. This is where we really need to look into where we are going wrong. And maybe this is where we really need to understand, why do we have all the numbers, but we still have a big gap in the way the SMEs are taken care of? And I'll go into the actual discussion around the SMEs. Can you go to the next slide? Okay, so we're looking at ideas that solve problems. We have talked about all the constraints we've heard from a Nigerian perspective. So we are selling the problem and not the product. You have to sell the problem that you solve and not the product. How do we do this? The current constraints that SMEs face, which is happening all over the world, is access to credit facilities. The SMEs are saying, we need loans, we need funding in order for us to either start our businesses when you're in startup mode, or to scale when you need to grow. But then these are some of the challenges we're facing. Is it because we are not risk averse? Then we talk about load shedding. I think this is something that is known around the world. Nigeria is one of the countries that has really gone through a whole decade of load shedding, right? Zambia is experiencing that as well. How do we then improve and ensure that we are looking at the person who is right at the bottom of this value chain, the small, medium enterprises, right? How does load shedding affect their business operations, their day-to-day ability to actually function? Access to business information. This is something that has also been shared in the previous discussions. I think Adenike mentioned, when it comes to business information, how are we helping the SMEs get informed on how to manage their systems, how to manage their business operations, how to do their reconciliations, and so on and so forth. Some of the things that we're also going to look into is things like connectivity. I can give you an example right now. As I was sitting here listening to all the discussions, I was telling myself, if my internet goes down, I am going to connect to my mobile phone. If the one on my mobile phone finishes, I'm going to connect to the other service provider. Where are we going wrong? We need to put ourselves in the SME's shoes. And then we talk about government policy and regulation. When we look at the government policies and regulations, the SMEs are saying most of these favor the commercial and the corporates, as opposed to the entrepreneur, the small business owner. You find even things such as maybe a deal to do a project. They'll look at how much your turnover is, how you've been growing gradually as an SME. But if you're a startup, you cannot prove where you are in that value chain because you are a startup, right? And then we're talking of access to infrastructure. We're looking at the roads in this case. Some of the biggest challenges, I think even the banks will agree, the reasons that most of the banks will not be found in the rural areas is such issues, access to infrastructure. But then when we look within, we discover that it's the SMEs that are actually affected. And yeah, so we now take a look into the COVID story, right? COVID-19 has brought about two aspects, especially when it comes to businesses, right? We have the data, we have the loss of businesses, we have, people who have been let off because obviously the organizations cannot afford to have employees on the job. We have had a lot of bad stories around COVID, but let's also look at the positives that people came together, and for the first time, the whole world came together and we're thinking of better ways of improving. Now we can talk about improvements when it comes to the food sector, right? We have organizations such as WFP that are doing amazing jobs regarding food relief. But then when we look at technology, where exactly have we been able to leverage on this pandemic when we were at home? Most of us were home. You were using your brains come up with ways in which we can improve. We've seen organizations in Zambia that have relieved their clients of the debt, the clients that had obtained loans pre-COVID. And then we've also seen the central bank, which is the regulator, come out and say, we're going to abolish fees on transactions that the normal clients, that me and you, would be using, be it on an ATM machine, transacting on a POS machine, and so on and so forth. And then we've also seen a digital transformation towards e-commerce. We had a lot of food deliveries coming up, the food delivery companies integrated with the restaurants, the large supermarkets to deliver foods. And this is something that is not so common in Zambia, but this happened because of COVID. And then we look at access to finance. We have now seen so many opportunities for organizations to get grants to improve their services and think outside the box. So what are we saying now? How do the fintechs help transform the SMEs? So we've talked about the problems, we've talked about where we've come from, and now we're looking at how we can then open the world's eyes towards the fintechs, right? We all know the fintechs to bring in agility. They're fast movers, they're innovative, and they also believe in automation, right? But all these three will not happen without the last one, which is interoperability. When we talk of interoperability, we're talking about collaboration, we're talking about partnerships. We keep crying about partnerships and where the banks and the MNOs come in, the mobile network operators. And this is where we see the fintechs being the middleman. The fintech will be the one to bridge that gap for the SMEs. And you'll see this as we go on in the slides. We can go to the next one. What is the consumer saying? If you look at this picture, this is a picture of an entrepreneur's store here in Osaka. And if you can see, we have banks, we have your fintechs there, we have your mobile network operator. If I wasn't in the digital space, this would be really confusing for me, right? So the consumer is saying, don't make your processes my problem. Solve for my success, not your systems. How is the SME supposed to help the consumer, that customer, the end user? And as much as we see this as digital transformation, it is also confusing for that customer who has a mobile phone with, these are about 20 different apps. How do we then provide a space where the SME is made comfortable to actually want to leverage on digital technology and not use cash? We're going to see this shortly. So one of the things that we do at Digital Paygo is we use the shared services approach. What does this mean? We've talked about having the banks, right? The banks, we know that one thing they're good at is structure. They have centralized systems. They're good at the KYC. They understand what processes and what you need to know about the customer to ensure that as we adhere to those processes, we also provide the best service, right? The best product. We also have the mobile network operators. The mobile network operators, they hold the subscriber base. They practically hold everyone into the palm of their hands, right? And then we look at the SME who's saying, I really, really want to make money. I want to offer a service to my customer, but I have a challenge. So here comes this fintech, okay? The fintech is good at innovation, is good with technology. So why not marry the brilliance that is from the banks, the subscriber base that is from the mobile network operators, and then there's the key, the regulator. The regulator is the one that will now ensure that the policies are documented and followed through, because the regulator, which in this case is the central bank, the regulator around the ICT space, the regulator that is ensuring that the SMEs are taken care of, the regulator that is protecting the consumer. And then you also have the policymakers like financial sector deepening that are saying, look, we are looking at the end user, okay? And we're concerned about the last mile, that person that is in the village. We want them to be financially included. How do the four come into this ecosystem? We provide shared agent banking, where we know that the banks are taking their customers out of the bank, right? Out of the branches. How do we do that? We empower the entrepreneur to become an agent, and then the agent then provides a service to that person in the rural areas. How are we going to do this? We also talk about mobile merchant QR code payments, right? We all know how to use cash. At some point, we all thought, it would be difficult to understand a computer. How do we then marry that progressive move from cash to digital payments through education? And then how are we going to help the SME understand how to leverage on this digital space? We give them tools, and these tools will come by virtue of us having a shared services approach, where you have the fintech bringing in the MNO, the regulator, and the bank together to provide that solution to the SME. Then if we go to the very next slide, this is where now we look at the products that each of these providers is able to provide to the SME. So we talked about the banks. With the banks, you have your cash in and cash out transaction. This is your deposits and withdraw. And then your airtime payments, which is your bill payments. And then you have your second generation, where now you are able to link your bank with your regulation payments. So where you have to make your tax payments and so on and so forth. And then we're talking about the mobile network operators, which also enable you to do cash in, cash out transactions. You do your bill payments, and then we have your third-party providers, which are your aggregators, the ones that will link the mobile network operator, the banks, the microfinance institution, insurance, and so on and so forth. So when we look at all these aspects of the digital space and how the SME can really be positively influenced by this move into digitization, we cannot speak of financial inclusion without actually taking a backseat and allowing ourselves to understand what are these figures telling us. We're talking about how the GDP of the economy has been affected. In Zambia, we've been hit really badly with inflation, right? Our currency hasn't been doing very well. But then outside all of this, these numbers that we are all familiar with, where are we missing the link? It's in understanding the end user. We then need to use a human-centered design approach and collaborate. We've seen the regulators collaborating with fintechs. We've seen the policymakers collaborating with the banks to ensure that the end user is also financially included. And the message out there is basically to ensure that the last mile, the person in the rural areas, is able to understand and also is able to use the product. And that product should be centered around the end user. And that's it from me. I'll take you through the key takeaways, which is basically what I just talked about. I think I did already share this. So over 90% of SMEs operate in the informal sector. And regarding the Zambian space, 30,000 of these are also MSMEs. Adenike also mentioned her comparison around MSMEs and SMEs. And I think it's clear that even in Zambia, the same impact that the digital industry has had on SMEs is similar in the world over. And for Zambia also, we've seen the fintech space grow from 25 fintechs in 2018 to 34 in 2020. And that's positive. It means we're on the right track and we're doing awesome things. And I also did touch on collections and payments, and specifically with the agricultural sector. This is the sector that is key in the digital financial inclusion space, because most of our population is basically farmland, right? We have a lot of people that are farmers, and these farmers are found in the rural areas as opposed to many of them being found in the urban areas. So how do we ensure that those last mile consumers are digitally included? And we then have to look at the processes and ensure that we are being efficient in the way we deliver these digital services. That's it from me.
Thank you. Thank you very much, Chilekwa. Thank you for sharing the key economic indices in Zambia, and generally for sharing the Zambia's SME experience and the challenges faced. Thank you also for the perspective of a viable fintech ecosystem and the role of fintechs in transforming SMEs through agility, innovation, automation, and interoperability. Thank you very much. So just a quick change. We're going to have questions now, but only for Shola, who has to leave in about 5 minutes. So we'll take the questions that have been directed to Shola so that he can take them, and then we'll go back to the program as is. Shola, are you ready? The first question for you, Shola, is what is the cost implication of digital transformation for SMEs?
Yeah, I think one of the mistakes people make is in looking at costs from transaction fees. I think, yes, so the direct answer is yes, there are transaction fees, which is just like tiny percentage per transaction. But I think that the opportunity cost is actually more expensive, you know, like the sale you didn't get, or the stress of trying to like close it, or trying to reconcile, or trying to like do all that. So I would say that yes, there are transaction fees, but like it is a model that has been tested and tried, you know. It is cheaper than the opportunity cost. Yeah.
Thank you. The next question was, can you explain how technology can block holes that give room for stealing and pilfering in my business?
Yes. Okay, that's hard. I don't know if only technology can solve that problem, but I think technology can play a part. And I think maybe in multiple ways. The first part of it is just like having a trail, you know, like having a digital trail. It makes it extremely easy to be reactive. So I'll talk about it in 3 ways, like being reactive and being proactive and some other things. So on the reactive side, at least if you have a digital trail, you know how much was collected, how much got into the bank, who collected it, how much did we pay. I think that allows you to like really audit and maybe reactively like figure out what the problem was in case there's ever a problem. Now on the proactive side of like, how do you even prevent holes from happening? I again think like technology can play a strong part there, starting from how you think about your inventory if you're selling products, or if you're selling services, how you reconcile like your invoices to like your receivables, your earnings, So I think that technology can help create that. So my instinct is that, and I don't want to plug Paystack in. I'm trying so hard not to put Paystack in this conversation. Well, my instinct is that there are tools already today, again, because these problems are problems that exist, and people have already figured it out. So there are tools today that exist that allow you manage your inventory, your invoices, your receivables, your reconciliation, and just like get everything sorted out. Yeah, so that's what I would say. But ultimately, I think the solution I don't think technology alone will solve that problem. I think there's an organizational DNA that needs to like evolve. So the solution comes in different places. I tell my people sometimes the solution is a recruitment, literally. The kind of people you recruit starts from it. So if you recruit the people that will take, like no amount of technology will fix it. So solution comes across, you have to take like a very like 360-degree view to it, like from your recruitment to your training to employee engagement to reporting to expectations you're setting to performance reviews. So just like take a very high level organizational view to this, and I think there will be progress.
Okay, you have just 2 more questions. One is, how does one even begin to navigate entry into streamlined digitalization, especially in a service-driven business?
Yeah, I think that, okay, there are 2 ways I think about it. Even for me, like one of the things and that's the good thing about Paystack or about me, like I've also like 4 years ago, Paystack was extremely small, like extremely. I remember when we had 5 customers. When we did the first month we launched, we processed 500,000 naira. And so the amount we kept there, you can imagine, probably less than 2,000. And so like we just had to grow every month. So I think I understand that. I think there are 2 parts to getting started. I think the first one is talking to peers. And I think that's something that worked for me. So I think businesses should, the same way individuals, like in school, there's one person that knows the work more than you, that you can ask questions, I think businesses should get comfortable in talking to peers. Like I talk to people that have done this before, or people that are doing this, just to understand the experience and all that. So I think that's the first part. So getting comfortable with talking to peers. There's also talking to professionals, which is like, there are people whose, that's their work, that's their living, so being very comfortable around talking to professionals, and that might be people that have built services or built tools for you already. And so I would say that the way to get started is, A, talk to your peers, talk to people that you think have done this. B, talk to professionals. And the good thing about peers is that they won't charge you, so that's good. Talk to professionals, and I think by that seems to be like the first way to like kickstart it. Thankfully, there are also a lot of tools on the internet. So the internet is an enabler. And so take advantage of that resourcefulness. One of the things I learned when I was starting Paystack is that great founders are relentlessly resourceful. So you have to be resourceful to be a founder. Like there's so many things that you are going to have to figure out like on your own, so, and this is one of those things. And so, yeah, just get comfortable about being resourceful.
Okay, and finally, why is it that software developers are not readily willing to partner with entrepreneurs to develop digital products? I believe in collaboration and developed a digital product, but have failed to find a software developer as a co-founder.
I'm going to take it personal because I'm a software developer. But I think sometimes it's because you don't want to pay. Like you want to just like ask someone to, and you know, it happens in other industries. So where you like ask a photographer to take a shot for exposure, you know, like you can't eat exposure. So I think the same part of it happens where in the industry as software developers, like as a software developer, you have plenty of people asking you to come and do this without paying you. So of course, like it's not going to be easy. So I think the first part of it is having like a shared vision, you know. So if, and don't even think of it as a software developer, just think of them as a partner, you know, like who can I share this vision with? Who else? And again, like, okay, so there are two ways to it. Let me just be clear about that. The first way is if you want to own the vision yourself, then own it yourself, look for the money and pay the developer. Like it's simple. Like there's no two ways about that. The other side to it is if you don't want to do that, then share the vision, like be willing to like partner, be open, and also like it's not just your vision, it's their vision too now, and understand that. So when you bring someone on board and you want to tell them what to do and how to do it, and you don't want to pay them, like you want to eat your cake and have it. So I think just being very clear about how to convince someone. And again, apart from being resourceful, you need to be able to sell your vision. You need to be able to get someone to buy in because you're going to hire, like we've hired about 120 people at Paystack today. If I knew that, and for you to hire 120 people, you probably have to convince maybe 500 people because not everybody will take it. So you're going to continue to sell your vision to people anyways. So this is your first person you're going to sell it to. So just get comfortable at selling that vision. Get comfortable at sharing that vision so that it's not just your vision now, it's our vision. And I think if you get that buy-in, the conversation becomes easier. Yeah.
Thank you so much, Shola Akinlade, for your time and your contributions today. We really appreciate it.
Thank you so much, everyone, too. Thank you.
Thank you. Okay, moving on to very quickly, I would like to invite Kingsley Nwose, who's the CEO of Jovial FinTech. Would like to invite you just to share your experience as someone operating within the market.
Okay, thank you for inviting me, and thank you everyone. It's been a very insightful session with so many heavyweights in the industry. I must say I've learned a lot. Okay, talking about my experience or feedback, I would say the banking sector have been very, very awesome, very encouraging since the emergence of this technology space in Nigeria, especially fintech. Like most of us here building things probably just think we can get this done. We don't have it all figured out, but yet we walk up to these banks and they give us all the support we need. So yes, the banks have been very, very awesome. The banks have also been very supportive, taking risks to release sensitive tools like their APIs to us, and then giving us things that we need to succeed, connecting us to people within their network. It's been very great, and it's been a very great experience. There's also been lots of hackathons, incubation, and all of that. All of this support system have grown fintech and grown technology in Nigeria so much. So I would say a very big thank you. Then the area I would also like to chip in some suggestion is that this support also should grow more. Like there are some individuals within the system who are willing to help by all means, and there are also some who probably serve as a blockade. There is this fear. We know we're dealing with money here, so people are afraid. People don't want to risk other people's money and get into trouble. But sometimes we have to take these risks in order to build these things. I've seen the banking sector coming up in that area, but we also have to do more. Then when it comes to support also, like investment, I think we should be more proactive in this area. Like we shouldn't wait for Silicon Valley to give us the endorsement first. We shouldn't wait for them to invest first. That's like, yes, we want foreign direct investment in the economy, but that's like making them buy over our economy. Like you have more confidence from them outside when somebody from the inside, somebody closer to you, have also had confidence in you, invested in you, or giving you the necessary support you need. So yes, we would like the banking system and the Nigerian digital space to give way more support and then try to trust us before others are also willing or able to trust us. Then for the SMEs, yeah, there's no better time to leverage technology and digital financial services to grow our businesses. This is a time when a lot of things have to be done digitally. Like the COVID-19, we never predicted that everything will be locked down and people won't be able to come out of their houses. But yet a lot of businesses thrived within this era. Why some of the businesses faced a lot of problems. We should try to leverage the digital financial space and digital space in general to grow our businesses. And for us in this space already, we need to do a lot of education. We need to educate the SMEs and educate the users. Like we've had issues where SMEs have equated certified business solutions, equated them with Ponzi schemes like MMM and the rest of them. That's because they don't have the knowledge. So we should try to build trust by the banks who already have the trust to try to put in more to make the people understand, because trust comes from people you already know. So the banks have been there for a while, they already know them. So yes, the bank should do a lot more in order to create this awareness, even as we also need to do so ourselves.
Thank you.
Yeah.
Thank you very much, Kingsley Nwose, for your contributions.
You're welcome. Thank you.
Thank you. Okay, just to go really quickly to the Q&As now. There will be rapid fire questions, so very short answers, please. The first question goes to Adenike. Who do SMEs go to when they need to take their business digital?
So, well, very briefly, it's a broad question, even though it's very simple. It depends on the kind of SMEs that you're talking about. I know a lot of SMEs go straight to their peer entrepreneurs. So the first thing an entrepreneur will typically go to is somebody else in a similar business or that they know that is within their network to do that. A lot of others also go to their BMOs or trade groups and associations. So that's why it's also very important to, when we want to invest and support SMEs, we look at existing associations and trade groups and BMOs as part of that investment, because people go to the groups that they have networks of support and resources from. Then they go digitally and online for those who have easy online and digital access.
Thank you. For Mrs. Tokima Bogunje, in your opinion, why are SMEs not getting on the digital revolution as early adopters?
Okay, that also is a very broad question that I'll give a quick answer to. Generally, the first thing on the mind of any SME is how to survive. We have to understand that the Nigerian business environment is actually quite hostile to business growth. So SMEs are the most hit. So it's how to survive. Now, having had the pandemic, being digitized became a survival issue. So it dropped, it went from being a luxury issue to becoming a survival issue for SMEs.
So we have so many questions, but we can't get to them today. So what we can do is look into the questions and see how we can get answers for them later, and then maybe send them to the attendees who request for them later. In wrapping up, I would like to thank all our speakers for their contributions to this engaging discussion. The overarching theme from all our speakers was the need for collaboration to ensure that the SME sector is not neglected, and for jointly created solutions to ensure a win-win for all players. Here are a few takeaways from our guest speakers. In his opening remarks, Mr. Adam Nuru of FCMB nicely set the tone with his excellent speech and raised a call to action for the need to support SMEs through the implementation of new technology. Mrs. Tokima Bogunje laid emphasis on the need for digitized solutions tailored to serve the SME sector and to help them thrive in an increasingly complex business environment. From Mrs. Adenike Adeyemi, she made the case for digital intervention in MSMEs, defined digital literacy and highlighted its key components, as well as the critical success factors for seamless digitization of SMEs. Shola Akinlade of Paystack emphasized the need for digital for improving the customer experience, efficiency, and convenience. Chilekwa Banda, all the way from Zambia, gave us the Zambian perspective, which included how fintechs use agility to bridge the gap between the needs of SMEs and the products available in the market. We also thank Mr. Kingsley Onwose for giving us the feedback on his experiences. We say a big thank you to you all. We also say a huge thank you to the sponsors. We couldn't have done this without you. As we bring the webinar to a close, I now invite Mr. Kingsley Iyamu, the CB Secretary of Publicity and Advocacy, to give the closing remarks and the general vote of thanks. Welcome, Kingsley.
All right, thank you. Thank you, TLC. It's been very all the way from Silicon Valley to Zambia to Lagos, Nigeria, all within one small classroom because of digital capabilities, which lays credence to our agenda today, digitalizing our SME space. But like Nike has rightly put it, because of the percentage contribution of the micro space to the entire SME, we now see macro SME making up a bigger percentage, a bigger chunk. Key insight I've taken away from today. And but at the end of the day, I want to thank Toki and our team for a nice presentation. I thank my MD, University Monument Bank, for his speech. And I also thank every other person that has come, Nikki Adeyemi, and every other person, the group chairman for CB, I call it group chairman for CB, and all the past ESCO members in CB. I want to thank you very much on behalf of Committee of Electronic Business, Electronic Banking Industry Heads, TLC Olatunji herself, and every member of the planning committee that made this successful. I want to thank everybody and wish all of us a very prosperous period, digesting and coming up with value from the information we've gotten today. Thank you very much and God bless you. Thank you. What do you say, TLC?
Okay, so this is goodbye from our end. Thank you so much to everyone who attended today. As I mentioned earlier, the recording will be sent to all attendees who registered. A big thank you again to everyone who contributed. Thank you to all the speakers and our special guests from all the way from Zambia. Thank you so much, Chilekwa. Thank you, everyone, and have a wonderful day. Bye.
Thank you. Thank you, everybody. Thank you.
Thank you, everybody. Thank you.
Thank you so much. Now, good one. Thank you.